Ever wondered about the world of exchange-traded funds, especially the Schwab U.S. Dividend ETF, also known as SCHD? This fund, with an impressive track record, strives to mirror the total return of the Dow Jones U.S. Dividend 100 Trademark Index, all before considering fees and expenses. And speaking of expenses, SCHD prides itself on its low expense ratio, just 6 cents for every $100 invested. Quite a bargain, wouldn't you say? As for its current price, it stands at $79.24. But that's not all that's been happening with SCHD this year. The ETF has seen some reconstitution in 2024, with some exciting changes to its holdings. Intrigued? You should be. Changes in an ETF's holdings can have significant impacts on its performance. Stay with us to delve deeper into the changes that have happened within SCHD. Ever wondered about the world of exchange-traded funds, especially the Schwab U.S. Dividend ETF, also known as SCHD? This fund, with an impressive track record, strives to mirror the total return of the Dow Jones U.S. Dividend 100 Trademark Index, all before considering fees and expenses. And speaking of expenses, SCHD prides itself on its low expense ratio, just 6 cents for every $100 invested. Quite a bargain, wouldn't you say? As for its current price, it stands at $79.24. But that's not all that's been happening with SCHD this year. The ETF has seen some reconstitution in 2024, with some exciting changes to its holdings. Intrigued? You should be. Changes in an ETF's holdings can have significant impacts on its performance. Stay with us to delve deeper into the changes that have happened within SCHD. One of the significant changes in SCHD's holdings is the loss of Broadcom. This might come as a surprise to some, given the impressive rise of Broadcom over the last year. In fact, Broadcom's value skyrocketed, surging over 98%, a testament to its strong performance. However, while this rise was impressive, it led to a rather unexpected outcome, a dwindling yield. And as the yield dwindled, Broadcom found itself no longer meeting the criteria for inclusion in the SCHD's holdings. It's a bit like a seesaw, isn't it? As the value goes up, the yield goes down, and vice versa. In this case, Broadcom's meteoric rise led to its yield dropping below the threshold required for its place in the fund. Now you might be asking, why is the yield so important? Well, the yield is essentially the dividend paid out by the company, expressed as a percentage of the stock price. SCHD, being a dividend ETF, places a high emphasis on the yield of the companies it includes in its holdings. So, while Broadcom's value was soaring, its yield was falling, ultimately leading to its removal from SCHD's holdings. But here's where it gets interesting. Every change, every loss is an opportunity for something new, something potentially better. In the world of investments, this couldn't be more true. But every cloud has a silver lining. The loss of Broadcom has been compensated by the addition of another company. And that's precisely what happened here. While Broadcom was removed, SCHD made room for a new addition, a company well-known, loved, and with a promising yield to boot. But we'll delve into that later on in the video. For now, let's remember that changes are a natural part of the investment world. And as we bid farewell to Broadcom from SCHD's holdings, we look forward to what the new additions bring to the table. Say hello to the sweet addition to SCHD's holdings, the Hershey Company. This confectionery giant, renowned for its delightful chocolates and candies, is now part of the SCHD family. But why Hershey, you may ask? Well, it's all about stability and growth. Hershey's enduring market presence, combined with its stable revenue stream, makes it a delectable choice for any dividend-focused ETF. Now let's not forget that with every addition, there's also a subtraction. In this case, it's the departure of the Company, or better known as 3M. Some might see it as a loss, but looking at the bigger picture, it's a plus. 3M has been marred by numerous lawsuits and a distinct lack of growth in recent years. So its exit from SCHD's holdings is, in essence, a removal of a potential risk factor. This strategic reshuffling of SCHD's portfolio means a focus on companies that promise not just dividends, but also stability and potential for growth. The average yield of the additions to the ETF, including Hershey, stands at 3.35%, which is a notch higher than the average yield of the ones removed. So what does this mean for SCHD? It signifies a move towards a more balanced and robust portfolio, one that aims to deliver consistent returns while minimizing risk. But the changes don't stop here. There have been more additions to the ETF. SCHD has boosted its portfolio by adding 10 financial services stocks. This is a significant development, as the inclusion of these stocks not only diversifies the ETF's holdings, but also increases its potential for growth. Financial services stocks play a crucial role in the global economy, often providing the fuel that drives economic growth. By investing in these stocks, SCHD is betting on the continued strength and expansion of the financial sector. The average yield of the newly added stocks stands at 3.35%, a slight increase from the 3.24% yield of the stocks that were removed. While the difference may seem minimal, over time, this extra yield could compound into significant gains. However, it's worth noting that financial services stocks can be volatile. They can be heavily impacted by changes in interest rates, economic conditions, and regulatory changes. This means that while the potential for high returns is there, so too is the risk of substantial losses. But let's remember, SCHD's objective is to track the total return of the Dow Jones U.S. Dividend 100 trademark index as closely as possible. This strategy has served them well in the past, and there's no reason to believe it won't continue to do so. With all these changes, the question is, does this move make SCHD better or worse? Here is a Twitter snapshot from SCHD Stan detailing every addition and subtraction for your viewing pleasure. In all fairness, I'm not very familiar with most of the companies. I trust the algo of the fund and will keep riding this to my financial freedom, however. No doubt, SCHD's Reconstitution has stirred the waters. We've seen significant changes, with the departure of Broadcom and the arrival of the Hershey company, not to mention the dismissal of the company, a dwindling entity overshadowed by lawsuits and stagnant growth. Yet, let's not forget, the average yield of the new additions sits at a promising 3.35%, slightly above the 3.24% yield of the stocks that were shown the exit. And let's remember, these alterations are not whimsical selections, but the outcome of a calculated algorithm designed to optimize returns. Despite Broadcom's exit, we believe the remaining stocks, including the 10 new financial services stocks, will step up to the plate. Thank you for watching. We hope this video has provided valuable insights into SCHD's Reconstitution. Don't forget to like, subscribe, and comment below with your thoughts on this transformation. Let's navigate our financial freedom journey together.